everybody to the summer August Beacon Report update video. Got all kinds of fun stuff to look at. I like to start with this S&P 500 chart. In the last 4.5 years, we have darn near doubled on the stock market. What else is interesting is the stocks from 2022 to 2024 were flat. The 2-year period where stocks were down, and then boom, just ripping the last 2 years. So the real estate market has been kind of dead nationally. Stocks are just on fire, up over 50% in 2 years. This really affects the higher end of the market, but it also affects the lower end because this is where a lot of down payments are coming from for first-time home buyers. Their family is helping them with down payments oftentimes in markets like Bend due to the affordability crisis. Coming to interest rates. Okay, this is the 1-year interest rate chart. And check this out. We are right on the lows from kind of last fall. Really the market ripped last fall. Anyone who was paying attention in late September bought a house, got the best rate and the best price of the year. It kind of feels like we want to do that again this year. Rates are trending lower into fall, and sellers are kind of getting sick of the market. They want to move. Now's a really great time to make a deal. If you're a buyer, especially because you got a little more buying power than you did earlier in the year. So we're going to continue watching rates like we always do. Okay, check this out. This is the breakdown by price point of sales. And the way to read this chart is these gray lines show how many sold in the last 12 months. The green is how many are actively listed. So see 550 to 600, this is the most active price point in Bend. It's the 550 to 600 to 650 and really to 700. You can see the most activity is happening here. So that's still a pretty hot segment in the market. Slower segment of our market is the 1.8 and above. And it's really the 1.4 and above. It's just been a little sluggish this year. Things are still selling. They just aren't moving as quick as they have in years past in that luxury segment. We do have about 68 listings above 1.8 million and 9 sold last month. So that puts you right around 6-7 months of inventory. It's kind of right in there in the balanced, but it oscillates each month, either a lot trade over a million or a little. So that oscillates the number of inventory to the division. It's a fun little one to look at because it shows the inventory compared to pre-pandemic levels. It's so interesting. Okay, Oregon's pretty flat. California is down. These are our feeder markets. California, Washington is up. So that's definitely dragging a little bit on our market. Also of interest is like the Midwest is just down. Huge inventory. They're one of the only markets that's seen real price appreciation in the last couple of years. And then we know Texas and Florida is leading the charge lower as far as overheated markets with full excess inventory. It's another great look at the national market here, broken down by 50 largest metro areas. Here's the 1-year price change. Again, Tampa, Florida, and Austin, Texas are leading the charge lower, but they are only down 6%, which is not a crazy number. Dallas, Texas. Here's San Francisco. That's a big feeder market for Bend, so that's part of the softness in our prices. It's coming from that San Francisco market. There's San Diego, Denver, Sacramento, Houston, Portland, Oregon, Seattle, Los Angeles. These are all the Bend feeder markets right here. So that's part of the reason we're seeing sluggishness in prices. But as you can see, again, this is not big. These are not big numbers. A lot of Midwest and East Coast towns are leading the charge upwards. Beacon Report. This is our favorite section here. Days on market went down. Inventory went down. We're going to take a look. More closings than we've seen in a long time. Let's just go straight to the charts. MLS data. This is the active homes for sale. There's 895 homes in Bend for sale in this price range. Pretty stable. Lots of listings have changed price. More than half, well over half, and the days on market for active homes has gone up and the price cut has gone up. So as we get into that fall season is when you start seeing people continue to cut their prices who haven't sold, as well as you also start seeing people pull the listings. The ones who aren't as motivated will take the season off and try again next year. This number has really just been a reflection of how many homes in the million plus range trade that month. We had more homes, 25% of the homes traded over $1 million last month, as opposed to 15% the previous month. So that's why we see this median price oscillating so much this year, especially price per square foot is pretty steady for the last 3 years with a little seasonality definitely in there as well. supply came down. That means some people have pulled their listings, but also the volume is going up each month, which is making the number of months supply go down. There's still a lot to choose from for buyers. 6 months is considered even. 4.5 is it's a nice balanced market, really. There's lots to choose from. There's not exactly a glut either. Days on market went down. July, it's interesting to see this last July, the days on market had gone up. The July before was a busy one. July before that was a busy one. So it's interesting to see days on markets going down this year into July. It feels like we're getting busy in the fall, like as if fall was going to be our spring market this year. The next chart is going to really show you number of sales. This is the highest we've seen since back here in September of 2022. So there's a lot of transactions happening, despite all the negative headlines. Deals are getting done out here. So it's possible if you want to be, there's 900 listings for sale, 173 of them sold last month. If you want to be part of that group, there are things that you have to do, and that's going to be consulting with an agent who knows what it takes to be part of this group. Bottom line, we've got 3.5 years of pent-up demand, and it is just bubbling. You can feel it out there. People are excited when rates come down. Just a quarter point makes a difference. That pent-up demand is coiling. We're seeing some of the busier activity we've seen in years. Interest rates are on the 1-year low. Sellers, you still need to price it right in order to sell quickly. And it's a great time to be a buyer going into fall 2025. They're not giving houses away, that's for sure, but it is a welcome environment for a buyer to buy a home right now. There's just lots of choices, get some accommodations and negotiations, and overall just a nice temperature market to be shopping in. So if you or anyone you know is having a situation, you want to consult on your goals, myself or any team member would be happy to help.